All right, hello. What's going on, everybody? Welcome to the stream. Who's here? How are we doing? Hey, Josh, how are you, mate? Good to see you again. Morning, buddy, morning. Welcome. Got a few charts up here. Really interesting BTC on a nice little run here. We've got local crossing above the global, right? We've got in a sideways market after being in this downtrend for a few months. Downtrend for a few months, and now all of a sudden we've got the local crossing the global. We're breaking key levels. 43,750 is a very important level to this market, right? So be really mindful of this level here, 43,750. While we stay above 43,750, we'll continue to move into this uptrend, right? And I can't help but think, how similar this price action looks to that price action there. Right? It was just like an all of a sudden almighty pump that got us back above these key levels and then created a new all-time high, right? And that's what we've got going on right now, an almighty pump getting us above key levels. There's still a lot of work to do, right? There's still a lot of work to do in this market to move it back into an uptrend. Absolutely, right? But there's a lot of hopium out there right now, a lot of hopium out there in crypto with, these Russia announcements and so forth, but make sure you cut through the hopium. Don't get too hyped up in the hopium. We are pushing into resistance right now. This is not the place to be opening a long position on BTC, pushing into 4-hour resistance. If we break this, global turns into an uptrend, then we can start looking for our longs. So we are right on the verge of being able to start looking for longs. Probably if we get above 50k and we start consolidating up there, then we can look for those long positions from there, okay? But this is a hopium-free zone, though, all right? Hopium-free zone. Don't fall into the hopium trap, all right? And get wildly long into resistance. Hey, KD, good to see you, mate. Hey, Warren, hello. Nico, Steve, good to see you guys. Welcome to the stream. I've also been thinking a lot about S&P 500 right now, and this is the area that I'm thinking about, is maybe where there could be a potential shorting opportunity. This is where we might see a potential shorting opportunity from here somewhere, because this is the level actually on the 4-hour time frame right here, and you can see how well this has been respected before in the past, all through here, here more or less as well. So could be a good opportunity from there for a short on S&P 500. If S&P 500 goes down from there, right, if we push into this level and then we see downside on SPX, we're very likely to see downside out of this extension area on BTC as well. All right, and this is why I'm saying, don't let the hopium catch you off guard. Don't let the hopium catch you off guard, because we're still in a downtrend on our big risk-on market, which is SPX. So there's every chance that this could just literally dump all of a sudden again and go and retest this level here at 43.75. That would mean that these risk-on markets dump as well, okay? And remember VIX, we've got VIX here. This is the bounce area in VIX. Okay, so when we're looking at VIX, we're thinking about if we get into this zone right here, then we're looking for a bounce. And that would coincide pretty well with this S&P 500, push into this area and then maybe see a pullback. How deep that pullback is, I'm not sure. But it would also coincide perfectly with this extension zone here as well, right? With the extension zone on BTC, we see a bit of volatility on SPX. We see VIX spike out of that kind of bounce zone. We also see some downside on BTC as well. So bear that in mind before you get wildly long if you are watching this and you are a, crypto trader. Hey, Eric, good to see you, mate. Throw in any questions into the chat as well, guys. Get them in there and I will answer these questions for you the best I possibly can. Throw your questions in. A lot going on right now in the crypto markets. A ton going on right now. And it's very interesting to see this shakeout and then just all of a sudden pump, right? And this kind of price action, you can see this type of thing happens quite regularly. Any trades you're looking at, throw them in the chat for me, please. And let me take a look at them. USD Singapore dollar actually looks pretty decent right here. I kind of like this here. We've got this consolidation here below the neutral area. Very easily could see that just pop up there, punch into resistance, and then dump onto the downside like that. Hi, Tom. What do you think of US 34 hour? Hey, CK. Good to see you, mate. Great to see you, CK. Sonar trade. Yeah, so it looks like it looks like that same area as I was just talking about on SPX, actually, where we could potentially see some downside. I think it looks pretty reasonable, at least for a TP1, for sure. I think it looks pretty reasonable at this stage, definitely. Now, let me just jump on the one-day time frame quickly here. Yep, so that's the level right there. Good market structure around that level. Check the 1 hour. Yeah, I think it looks pretty reasonable, actually, CK. Again, so if we see that volatility on the VIX, we see this push to the upside here, and we see that same kind of push to the upside, like I'm just saying, up to whatever level this is here on the 4 hour time frame as well. The VIX is going to be down in that bounce zone, all right? And when the VIX is in that bounce zone is really kind of when longs are potential, right? Because when VIX bounces and when you see those pullbacks, okay? And this is not really a well-established uptrend just yet, so I could see us move back down into maybe this area down here, out of this extension zone, okay? It really is a fresh touch as well. So I don't mind the idea at all. I really don't mind the idea at all. Aussie dollar CAD and Aussie dollar Swiss franc 1 day time frame. All right. Aussie dollar CAD. Let's take a look. Aussie dollar CAD 1 day. I don't see anything there. I mean, the only potential thing that I kind of see is if we do get a more of a move to the upside and we maybe break those highs there, then we probably see something like that, a BRC through that resistance level right there, okay? That 75% alignment level, but right now I don't see much else. We're still downtrending markets on Aussie dollar Swiss franc, and we're a downtrending market on Aussie dollar CAD as well, Eric. 1 day, definitely, yeah. Yeah. So, these markets still have a lot more to do. We're in a 100% downtrend here. I guess you're probably looking to buy that, but I probably wouldn't be looking to buy that. I'd probably be looking to maybe sell a level up here, perhaps, on a lower time frame. Euro NZD 4-hour hit my entry, just waiting on that to play out. Well, let's take a look at Euro NZD then. Euro NZD. Oh, from here, yeah? Oh, 4-hour. Okay, cool. Caught entries here. Nice. Good reaction at the level here, right? So pretty good reaction at the level. Let's take a look at the 1-hour time frame as well. Yeah, you can see immediate reaction here at this level, bouncing off this neutral zone. Cool. Looks like a pretty good one. KD, it looks good. I think the trade was something like this from memory, something like that maybe? Yeah, now just waiting for this to play out. Bang on the neutral zone, absolutely. Just like to the pip almost to the pip. Really, really good. Really, really good. So that's really good to see. And you know, we've got the nice structure over here. We've got the impulse move. We've then got the dump back to the downside. Could very easily pop out of that, come back up here before it decides what to do next. And, you know, it's good to see, you know, the local kind of crossing down into the top of the global here, because this is where bounces tend to happen. Noted, Tom. I sold Aussie dollar CAD a week ago from NNN. Oh, right. Okay. So you're in a position already. Hey, Chris. Good to see you, buddy. Good to see you. Okay, you sold this level here a week ago. Okay. 1, 2, 3, 4, 5, 6. Okay, so let me say, when you saw this kind of price action here, you had 2 candles closing above the level. You then had this wiki move kind of holding above the level as well. That was probably a good indication to jump out of this one at break even for sure. When we kind of consolidated all around here at that level. Good opportunity to jump out at break even when you saw this consolidation really that's above the level there. Because if you kind of draw a line here, there. Most of those candle closes are above this level here, right? So this is a great opportunity, Eric, to go and review your performance here and why did you not try to get out at break even on this one in this particular case. Really good opportunity to go and review this one, do your own review, take a look at it. Okay, why didn't I get out at break even? Because you can see pump, cool, awesome. We pumped into the level. Hopefully we dump to the downside right now. If we don't, then we have a contingency plan if we consolidate here to get out at break even. We had, you know, multiple closes above the level here. Probably a good sign to get out at break even in this case. But, you know, if you're still in the trade, I'd be trying to get out at break even now for sure. I'd be looking to get out of that at break even for sure. There's every chance that you can see, you know, this market has just progressively moved to the downside further and further and further. Maybe that saves you, gets you out at break even there, because I'm assuming that the trade is probably something like that. Hey, Chris, welcome. All right. What do we got available here on the Sonar? Let's just do some filtering. Okay, USD Singapore dollar, I just spoke about that one right there. Pound Japanese yen is just edging above this level here on the 1-day time frame. It's just edging above this. This is very aggressive, right? That's incredibly aggressive, right? It's basically like spawning right on this level here. What I'd really like to see is I'd like to see more commitment to the upside from this market, because this is the situation where it's like, okay, we've formed a high, we've formed a lower high, we could form another lower high and then dump to the downside further here, right? There's every chance that could happen. You can see how choppy it's been. You know, we've had RTD really just crossing back and forth quite a lot in this particular case. So I could absolutely see, I really feel like we do need to see some more commitment to the upside. US 30, we've already talked about that one there. Euro yen, really similar to pound yen as well. It's kind of got a little bit more commitment here to the upside, but you can see it's just one big move here up. Right, it's one big move up, and it's like there's a lot of blank space in here. There's a ton of blank space in here, but I like that it's consolidating here above. If we continue to see the consolidation above, then it could look like a nice trade to the upside. But again, look at how choppy this is. Very choppy market right now. Very choppy market. I don't mind pound US dollar. Right, if I'm looking at these, I'm probably thinking pound US dollar is my preferred if I'm looking at pound yen and pound US dollar, because pound yen didn't have that commitment above the level, right? It didn't have that commitment above the level. And if we draw a trend line through here, it really coincides almost perfectly with the potential level of, you know, we've got like multiple confluences here on the trend line, and we've also got the support level here from X mode with the strategy mode trade right there. So either this bigger trade here or something like that, both looks pretty reasonable to me, because it puts us below the trend line and also below this previous swing low here as well. So in general, I like the idea of this trade. This looks like a nice little trade to be taking, especially at how aggressively we retook this level when we did test it previously, okay? So if I'm tossing up between pound USD and pound yen, I'm looking for that pound exposure against one of the like safe haven assets, then I'm probably looking at pound US dollar in this particular case, right? And that's probably the trade that I'm taking. Maybe this shorter one here, to be honest with you. This shorter trade here is probably my preferred. Again, pound Swiss franc here even looks better, because you can see we've got a really nice bullish engulfing candle right here where this level was previously, yeah? USD ZAR, NASDAQ 100, we took a TP1 here, so most of you should probably be getting out. If you, that was the original trade. We talked about that in the funding session last week. I think a few of you got in on it, grabbed your TP1. Now you'll be getting out at break even. But, you know, again, this again just coincides exactly with that price action that I talked about already on the S&P 500, on US 30, okay? So it's like, you know, you might take the US 30 trade, or you might take the NASDAQ 100 trade, but I wouldn't be taking them both, okay? This is like a double test, like this is repeated now kind of thing. We are in a pretty severe downtrend here on the NASDAQ 100. But, you know, making a decision between NASDAQ 100 and US 30, but you don't take them both because they are very highly correlated markets. They are both US indices. They really represent the US stock market in general, okay? Pound CAD, I even like the idea of pound CAD actually. So pound CAD here, what I like about this is we had the consolidation here below the level. We then punched through it really hard. And then when we took the level in full, you can see we had this bullish engulfing candle right there to take the level. We've then got, you know, the structure here of that previous consolidation with the level just above it. We've had it act as a support in the past, so we know buyers care about it. We know sellers care about it. We know the entire market cares about this level. Look at how it's interacted with this market in the past, right? So in general, pound CAD, I like the idea of this long position. It's got a reasonable stop loss. It's got reasonable TPs. We're in, you know, an uptrend, and the price action wise, it looks really nice as well. So the retest here looks pretty reasonable. I think we might have talked about this in the funding session as well. The retest there looks very reasonable to me on pound CAD. So I do like the look of that one. We've exhausted our list now, and then we've got Japanese 225. You know, if you're looking for that short exposure on equities and you're tossing up NASDAQ 100, US 30, maybe Japanese 225 is a better option for you. In general, Japanese 225 has been weaker than those other, historically has been weaker than those other markets, right? You can see it's basically been chopping sideways since February 15th, right? You can see how this has been chopping sideways. This is not that big bullish pumping uptrend that S&P 500 has been, okay? So maybe this is actually, you know, a nicer trade for you to trade around, just given the historic weakness of Japanese 225 compared to those US indices. All right, so that's something to think about as well. Maybe if you're looking for that equities short exposure, this could be it. 120% downtrend, checks that box. Pretty nice stop loss, good chance of getting out at break even. Reasonable TPs, not trying to push us through too much market structure. Takes us back down to this previous low. So pretty reasonable in general, I think, for this Japanese 225 trade. Few trades here that I like, a few that I don't love too much on the active sonar trade so far. Any questions on those things, guys, or any other trades you want me to have a look at, or any X mode trades that you might be setting up, perhaps? Okay. Make sure you give the stream a like as well, guys. Give the stream a like, and will be sweet. All right. Throw in any message. Throw in any questions, guys. Chuck in your questions. Chuck in your X mode trade setups, whatever it might be. Throw them in there. Or if you have any other questions, even if it's about investing, if it's about crypto in general, if it's about stocks in general, if it's about index investing, if it's about anything, right? Anything financial, I can probably give you a pretty darn good answer. All right, this is what I do. So if you have any questions at all, let me know. All right. Let's just take a look at the BTC price action while we're waiting for that. I like how we're maintaining this level. We're maintaining 43,750, right? That's really good signs. That's good signs for BTC, for a bullish move on BTC. CK, NZD Singapore dollar 4 hours short. All right, I'll take a look. That's a nice. This here, like, see this? That's starting to look a little bit parabolic. That looks like a parabolic kind of bottom right here. And you could even extend it to that there as well. That's pretty, it's a pretty nice little price action here, the way that that's forming that rounded bottom parabolic kind of move to the upside here. It's kind of like it's building up, it's building up, it's building up, it's building up, and then explode. Good for the bulls. Good for the bulls. NZD Singapore dollar 4 hours short. Yeah, let's look at that. Oh, Singapore dollar, sorry. Okay. From here. Probably something like that, or something like this here if you're a little bit more bold. Maybe even something like that there. I think that's a reasonable trade, something like this here. Pretty decent downtrending market right now. If we get a really strong pump up in here, we could catch a short here, grab a TP1 before we punch it into what would become a support, because you can see all this market structure around here. You can see there's plenty of market structure around there for it to bounce off. But if we do pump up there really quick, right, if we get a very quick move, the market's want to fill up that gap that it kind of forms between that previous structure and the move to the upside here. All right, it's going to want to fill that a little bit. What do you think about the idea that BTC as a less liquid asset is an indicator what is going to happen on SPX later on? What do you think about the idea that BTC as a less liquid asset is an indicator on what's going to happen on BTC later on? Because BTC is a market with lower capital, the concept says. Yes, from Harden. Yeah, sounds good, CK. Then it reveals trend faster as bulls and bears are winning there faster than on other markets. Okay. I probably, in general, the lack of liquidity in BTC has never really shown significant correlation with S&P 500 during uptrends, right? We see years of bear markets in something like BTC, from 2017 through to 2020 was just a massive bear market, basically. And you don't see that same kind of thing on S&P 500. So for me, what the correlation between S&P 500 and BTC is that when S&P 500 goes down, BTC also tends to go down. Why is that the case? Because investors, they do not respond well to uncertainty. And when there's uncertainty, just from a macro perspective, money just flows out of equities in general. Money flows out of risk markets in general. Therefore, money flows out of S&P 500 as a result. At the same time, money flows out of BTC. Now, I don't think that BTC is a leading indicator of S&P 500 because the market participants in BTC don't necessarily have more information than the market participants in S&P 500. If anything, their vision is more clouded because of the significant volatility in BTC, right? So I don't see BTC as a leading indicator for S&P 500 for those reasons. And you've got to consider that fear and greed, euphoria and fear build up much faster in crypto markets than they do in equities markets, right? So just because, recently BTC had this top because it got really it got incredibly, euphoric, and then we saw some downside. That's not really a leading indicator to S&P 500 in general. Yeah. That's just a market that's really driven by small investors, small retail investors that are driven by emotions. All right. And those emotions get out of hand for those investors. So you've got to think of this, right? So think in an uptrend, right? Uptrending S&P 500, uptrending BTC. Let's move that one there and let's have that one here. Okay, so let's say that this first one is S&P 500. And let's say the uptrend looks something like this here, right? You know, we have the pullbacks, we've got the moves to the upside, and it's a march to the upside like that. Well, that same uptrend in BTC, like a BTC uptrend, is something like this typically. And it's much more, you know, euphoric and much more fear-based here. Okay? But in general, I don't necessarily subscribe to the theory that BTC could be a leading indicator to S&P 500. The only thing that the lack of liquidity in in BTC compared to S&P 500 gives us, and the lack of market participants, is that there's going to be more inefficiencies in that type of market. There's going to be more market inefficiencies, and those market inefficiencies are things that we can take advantage of. Okay, so you know, these market inefficiencies are these things like this that I just showed you, where it's the massive euphoria and the massive fear that gets built, and those become the inefficiencies that we can take advantage of. So that's what BTC has different to S&P 500. It's more market inefficiencies. And there's a lot more market inefficiencies as well as you move through, you know, the shit coins. And as you move through all of those low liquidity shit coins, there's market inefficiencies there as well, right? So yeah. Hello, Joseph. How you doing? Good to have you here. Welcome to the stream. Great to have you, mate. You know, a lot of people got like really hopium driven here on BTC because earlier today, Russia announced that they would accept BTC as legal, or cryptocurrency as legal tender, or something like this, acknowledging cryptocurrency as legal tender. So what happened was, you know, this hopium just like all of a sudden just struck the market again. But it's very interesting that it's dumping to the downside, right? You know, this generally means that, you know, there was someone knew about this and someone was buying and accumulating for this pump to then just dump it on the heads of the retail that start piling in because, oh, Russia all of a sudden, you know, accepts that crypto as legal tender. Oh, that's great news. BTC will go up based on that news. But no, what it is what happens is retail, you know, traders start getting in really heavy, and then the people that or, you know, the institutions, the smart money, all that thing that were accumulating lower, then dump it on the head of those people. Because at the end of the day, we're still in a downtrend, right? We're still in a downtrend on this market. Great answer. Thank you, Tom. No worries, Chris. No worries, mate. Not a problem. But that doesn't mean it's all over for BTC. We could consolidate above this level here. We could then make a run for 50K, maybe get rejected, and then consolidate above there before we continue on to the upside and go and try to take these highs again, right? That's what we really need to see to have a bull thesis here on, that's really our bull case for BTC, something like that here, right? When we start seeing the consolidations above these key levels here, all right? And it's the same for any market, really, okay? It's the same for any market, really. It's just that this market right now has the volatility. It's got the inefficiencies that you can take advantage of. All right. Throw in any other questions, guys. Throw in any other questions. Get them in. And you got to remember, like, investing and trading are two very different things as well, right? So if you're thinking about this from the perspective of an investor, it's very different to be thinking about this from the perspective of a trader, right? As a trader, what we want to be doing is we want to find those markets that are obviously in the uptrends, and we want to buy the pullbacks in those uptrends, right? Now, that's not necessarily so different for an investor, but as an investor, you know, what we basically want to be doing is we want to just be accumulating this at better and better prices if we believe in that asset. If we believe in this asset, what we want to be doing is accumulating this at better and better prices. So because we can never find bottoms and we can never find tops, it's impossible for an investor or a trader to find a bottom or a top. Like, it's impossible to know where the bottom or the top is going to be. So as investors, what really, you should be doing in this type of market, in BTC or in Ethereum or S&P 500 or whatever the heck it is that you're investing is buying this market incrementally over a period of time, right? It's called dollar cost averaging. You've never heard of dollar cost averaging? It's basically where you go, okay, well, on the 15th of every month, I am going to buy I'm going to buy the market, right? So you get buys in all through here, and you're just accumulating slowly, because yeah, sure, you bought the top here, but you also bought the bottom here, and then you bought the middle of the uptrend here, and then you continue to just buy and buy and buy and buy over and over and over again, doing things like this to average into a position and be able to diversify over time. Okay. And this works out incredibly well, especially if you've got like a monthly pay schedule or something like that. This is when you make your investment. This is when you dollar cost average. This is when you allocate that capital into those markets. And this is really like a personal finance thing at the end of the day. It's making sure that you've got that money to be dollar costing averaging into those markets. It is a personal finance issue at its core. Aussie dollar Swiss franc worries me a bit. I know you already mentioned it, but would you consider to place stop loss on break even already? And would you short BTC at where it is now? No, I probably wouldn't short BTC where it is right now. No, I don't think it's shortable right now, especially while it's holding 43,750 and with the local kind of crossing into this level right here. No, I wouldn't short it right now. I'd find something else to short. Japanese, if you want to short a risk on market, go and short Japanese 225. Aussie dollar Swiss franc. Okay, so you jumped into this trade here. I'm guessing it was something like this. Here we go. Something like that, maybe? I would probably wait for the close of this candle. At the end of the day, like, setting to break even right now or waiting for that candle to close, there's really no difference between those two things, because if this dumps down and gets back below here, oh, that's awesome. I should have waited for the second candle to close. If it closes up here, right, if it closes up here, you're in the exact same position anyway. You've got a stop that's not at break even, but at break even, sorry. If you feel uncomfortable about it and it's worrying you, set it to break even and move on, and don't look at this market not ever again, but don't look at this market again until it forms some new structure and until you can trade around it, okay? If it's worrying you, okay? Really, the number one rule of thumb I would say about setting to break even is if you feel some sort of emotional pull around that market, if you feel some sort of emotional charge, then immediately... and NM was a short level, then immediately set that to break even, right? As soon as you feel that emotional pull, that means you're not going to operate to the best of your ability anymore. You're not going to operate at peak performance because you are going to be driven by those emotions. So I would absolutely say, set it to break even if you feel that emotional pull, okay? That's number one rule of thumb for a set to break even position, okay? What other questions have you got, guys? One day time frame on SPX 500. The market has just it's just shook everything off. This is just a meteoric move to the upside, and it's just like shaking everything off as it goes, kind of thing. It's like a little bit of uncertainty, pull back for a week or so, shake it off, pump to the upside again. It really has just, it's been a very profitable time to be trading the S&P 500. Very profitable time. That's why I've been basically talking about this for the last 12 months, because it's just been an incredible opportunity here to be trading in the S&P 500, because it's basically this. Buy, 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 buy. That's what it's been essentially. And there's, you know, there's not many markets where you can basically feel comfortable buying almost any pullback. New setup, Aussie dollar CAD Sonar. Let's take a gander. Okay. Yeah. I don't mind this idea. I don't mind this idea at all. Really bearish move out of that. Yeah, I don't mind this idea at all. Got to remember, you know, there's probably some stop losses in here somewhere. I would say there's some stop losses through there. We pump up, we clean through them, push it into the extension, push it back down, and then if we continue on, this is probably where we go back and find some support around there somewhere, okay? So, you know, it makes a lot of sense that if we rally hard to the upside here, that we do see a pullback. We come back in, we find some support down here somewhere around this previous market structure, and then we continue on to the upside if we continue on in this uptrend. If we don't continue on in the uptrend, then we just continue to dump back down through, we go back through here, and then it's just bulls versus bears at each one of these levels. But in general, you've got a better chance of this working out than not. Gold behaves silly. The rates are supposed to go up, the US bonds too. The gold always was down when bonds go up, whereas now this correlation seems to be gone. Gold behaves silly. The rates are supposed to go up. Over here? No, because I think that if we got all the way to there anyway, the trade was invalidated already. I think, Warren, that the trade was probably already invalidated if we got to that level anyway, because by that point, we'd probably be moving through and local would be crossing over anyway. So really, it's kind of like a situation of hold the extension or it's invalidated. I mean, it's right on the verge here. I know. But it's probably already invalidated by the time it gets to that point, to be honest with you. Gold behaves silly. The rates are supposed to go up to the US bonds. And gold always was down when bonds were up. Gold was always down when bonds were up. Bonds rallying is reducing rates. What's gold doing? Okay, gold 4-hour rally. Okay, cool. Gold's just choppy as ever. Great. Bonds are down. Bonds are down because when there's the potential for new bonds to be issued in the market at a higher coupon than the previous bonds, those previous bonds become worth less on the secondary market. So you got to remember, bonds are an instrument used by the Treasury in order to raise money for a country, and they issue a coupon. And when that coupon increases with an increase in interest rates, those new bonds become worth more than the old bonds. Therefore, money flows out of old bonds and into new bonds. Therefore, prices in bonds go down relative to those new bonds. Only for new bonds. Yeah, better percent. But what you're seeing here is the price of bonds, not the percent yield, not the coupon. So when bonds go down, that means that yield goes up. When bond prices go down, bond yields are going up. That's what it means. I can't really make much of gold right now. It's really just very choppy. What I do like in terms of this long position is that we have had, you know, a multi-month march to the upside and a multi-month establishment of new higher lows, which is really good to see. So, you know, that gives me some good feelings about this particular position here. So let's have a look at the 30-year bond yields for the US. Bonds, they dumped. You can see they dumped. So this is the idea of new bonds being issued on the market. Therefore, these bonds dump, these longer bonds. And then now, you know, market is basically becoming quite bullish again for whatever reason. And now they're rallying. So I have no idea why, but it kind of... Oh, no, wait. What? This is US 30. I'm looking for 30-year bonds. There, I clicked the wrong one. Okay, yeah, so we've got dumping bonds here. That's what I expected to see. That didn't make a lot of sense. Obviously, dumping bonds right here. This is bond prices going down because coupons are going up. Okay, so the price goes down if the coupon goes up and vice versa. Okay, coupon goes down, price goes up. Yeah, so that interest rate hike is getting that interest rate hike is now being priced into the market. So the thing is, right, what really new investors and traders tend to think they can do is that they can, when the actual news happens of rates are being hiked now, they think that they can trade that, right? But the thing is, this price action right here, really the price action since that top right there, this is all about bond prices this is all about, rates going up, which means that the coupons are going to go up, okay? So since up here, the market has been pricing in interest rate increases. Probably even since here, to be honest with you. This was the huge COVID pump. Now, this happened because this was almost like a flight to safety as well. So, yeah. Anyway, that's what that's what this price action looks like, and that's the coupon rates increasing to meet the demand in the market, because the market demands higher coupon rates. Well, all right, thanks, Tom. That's pretty specialistic. Thanks. Yes, this is correct. Yields go up with interest rates, and gold is non-yielding asset. Thus, investors shift from gold to bonds when interest rates are about to hike. Sometimes gold acts like a FANG stock. Sometimes gold acts like this mega rally FANG stock kind of thing. Sometimes it acts like a zero coupon bond. Warren, okay, you're giving me a headache, mate. All right, sorry. Sorry, buddy. So yeah. Sometimes gold acts in funny ways. Gold's a very funny instrument. It's really... Gold people are funny people, guys. Gold people are very interesting people. Gold people are really like Bitcoin people, but they're like old school Bitcoin people. You know, like the Peter Schiffs of the world and stuff like that. Gold rock people are hilarious. They they have a lot of funny ideas about the world, and that they're gonna one day go and withdraw their gold from a vault when the entire world is falling apart, and they're gonna go spend gold on shit. It's just funny. It's very funny way of thinking. This is why gold price going up seems strange. Gold price also goes up as a hedge against inflation as well. So you got to think about, sure, interest rates are going up, but if the market doesn't believe that that interest rate increase can stem the inflation, then that means hard assets are also going to continue to appreciate in value as well. So, because people are still going to, the reason why hard assets appreciate in value around times of significant inflation is because people need a place to put their money where it doesn't lose spending power. And that's why gold can continue to rally even when, you know, there's a lot of talk that interest rates are going to be increasing, because you know, if the market because the market doesn't believe that that's going to stem inflation, that's going to stop inflation. So you need to put your money into a hard asset, and the traditional hard asset is gold. A non-traditional hard asset is Bitcoin. Traditional hard asset is real estate. A traditional hard asset is equities, because you know, companies can raise prices along with inflation, which gives you an inflation hedge inherently. But that is my thesis around why gold price going up seems strange and why it's happening, because the market doesn't believe that a simple interest rate hike is going to stem inflation. And people need to protect their purchasing power. Alrighty guys, it's getting late. I've talked a lot about a lot of stuff. I'm giving Warren a headache, so I'm going to sign off. I'm actually heading back to Australia tomorrow, so I will be talking, the next time I talk to you guys, I'm going to be speaking to you from Australia. So we won't do an essentials video this week because I will be flying out tomorrow, but you know, I will catch up with you guys all in the weekly market review. Put out a weekly market review. It'll be from my place in Australia, and then our next live streams will be from there as well, funding session, and also the Wednesday Q&A session as well. So bring all of your questions to next week's session. Bring any questions. If this conversation has stemmed, you know, some interest around, you know, anything crypto, investing, how macroeconomics works, whatever, I'm happy to discuss those things with you guys as well. So bring them to me, and yeah, we'll go from there. Thank you very much, guys. Have a fantastic week.